Without a doubt, a very, very important thing to do as a trader is to identify and mark up key levels either on the weekend or during the week, during the trading week, whatever it is. But in this particular video, I wanted to share my theories from a psychological perspective on how you can mark up levels with complete clarity and you're not biased or blinded in the moment with emotion, but you're clear and making a rational decision of what the best key level is or even what the best trade is, and how you can do that and what you need to be aware of. And because I see a lot of traders who look back on the positions they take and they're, that wasn't a rational decision to make. That was irrational. It was obviously blinded. I obviously had a bias. And I wanted to show you guys how you can get rid of that so you can increase your results, you can increase your consistency, and you can lower your emotions. Now, if this is the first time checking into the channel, first and foremost, welcome. My name is Pat Baylooney, and I'm the founder of Master Your Trading Mindset, which is an education and performance coaching business. And we help traders all around the world master their trading mindset, overcome strong emotions in the market, and help them gain consistency and help them gain funding. Now, if this is the first time checking into the channel and you haven't already got the Bulletproof Your Mindset tool, I'm going to encourage you to jump in the description and grab a copy. I only let 30 copies of that out per week, and it's transforming and helping traders all around the world lower emotions, gain more consistency. So check it out. It will be of value to you in your life. Now, the thing we need to talk about here when we talk about having complete clarity in decision making and complete clarity when you go off and mark up the charts, the thing that pops into mind that would stop traders from having complete clarity is a bias called confirmation bias. And confirmation bias is pretty much the granddaddy of all biases. And what it is, just as a general example, is if a support or an event supports our priorities and we label that event good, we're going to be likely to only let in information that supports that initial belief or that initial bias or that initial expectation. So that's what confirmation is. We're confirming the expectation or belief, and only we're having selective attention and filtering the information we take in and only letting information that supports that belief or expectation. So when we talk about having complete clarity in our decisions and our marking up of the charts, etc., the thing that would undermine our ability to do that with complete clarity are the expectations, the beliefs, and the stories that we're creating in our mind prior to going to the charts to mark it up. And I see this over and over with clients and students in the 12-week challenge. They create what I call a virtual market in their head. You've got the real market over here, you've got the virtual market in your head, and in their virtual market in their head, they're creating a story of what they think is going to happen. It has no basis in the real market, but they create a story about what they think is going to happen in the market. And it comes back to that old adage that you have to trade what you see, not what you think. And it's so simple, yet it's what I've seen the thing that undermines most traders' success is they're creating ideas and stories in their head in this virtual market, and that's tainting their ability to be able to execute with complete clarity in the real market. And that's where a lot of their losses come as a result. So in order to go up to the charts and mark it up with complete clarity, it's essential to not have expectations on what we believe the outcome is going to be or what we think is going to happen in the market. So for example, if we're on the weekend and we're looking at euro dollar and we're like, that looks good to sell off, or we're looking at Bitcoin and we're thinking Bitcoin has to go up, or if we're looking at Tesla and we have to think Tesla has to go down, these are all unrealistic expectations we're creating in our mind about the outcome because nobody actually knows what's going to happen next. So it's unrealistic to expect some level of an outcome on that individual trade. We can expect an outcome over a large sample space if we have an edge, but we can't expect an outcome at the end of an individual trade because nobody knows what's going to happen next. So if we have an expectation, an unrealistic expectation going into the market, what's going to happen? We go to euro dollar, and now we're going to let in confirming evidence through confirmation bias to support the expectation, the belief. And that's going to taint our ability to mark up the charts with complete clarity. So the way we have complete clarity in our decision making and in our marking up of the charts is by being aware of what type of expectation, how am I approaching this position, how am I approaching this decision to mark up the charts? Is it because I think I think I know what's going to happen next, an outcome? Or is it because this is what aligns with my trading plan? It's a process-based. And you need to differentiate, is it an outcome-based decision or is it a process-based decision? The best traders I know are making process-based decisions when, an area of value aligns with their trading plan, they mark it up. Or when a trade aligns with their trading plan, they execute on it. Whereas the amateur, not so successful traders are making outcome-based decisions. Oh, Eurodollar looks like it's going to sell off, I'm going to sell it. And that's where all the confirmation bias and the biases kick in. That's where all the emotions are. That's where all the unsuccessful results are. So it comes back to your expectations. It comes back to the story you're creating in your head. If you have any story about what you think the outcome is going to be, I guarantee that's going to undermine your ability to gain consistent results and execute with clarity in the market. Because when you have confirmation bias coming in and you're only letting in information that supports your bias, your expectation, your belief of what's going to happen next, you then block out important information that the market's trying to communicate to you. The market's always trying to communicate price over time. The question you want to ask yourself is, are you listening? And we're not listening if we have unrealistic expectations or beliefs on the outcome because of confirmation bias and disconfirmation bias. Confirmation bias is to only let in information that supports our bias. Disconfirmation bias is to block out any information that doesn't support our bias. So my message for today is, if you want to have complete clarity in your marking up of the charts, if you want to have complete clarity in your execution of trades, don't set expectations on the outcome of a position. Don't impose what you think is going to happen next or your beliefs of what you think is going to happen next. Get really clear in your trading plan, and if the market aligns with what it says in your trading plan, execute and act. And I created the Bulletproof Your Mindset tool to help facilitate this exact thought process. You want to differentiate, is it a process-based decision? Am I making a decision because it aligns with my trading plan? Or is it an outcome-based decision? I'm making a decision because of what I think the outcome is going to be. Process-based decisions will help you gain consistency, funding, and help you hold on to that funding, and it'll help lower emotions in the market. Outcome-based decisions will have you trading a virtual market in your mind with no edge, and will be very emotional, and it will be the boom and bust cycle in your trading. The Bulletproof Your Mindset tool, it's a completely free tool. I think it's an enormous amount of value. Will help you make process-based decisions, help you execute a market with complete clarity, because now you're not going in with unrealistic expectations. You're there listening to the market, there's no confirmation bias, or it's significantly reduced. You're present with the market, and you're making decisions based on what the market's communicating to you.